The health of the stock market right now, what's your own assessment of it?
Well, look, it's had a big rise for various reasons. Obviously, it's been led by the US, which had a big rally on the back of Trump. I mean, when you look at the profits per se, they're nothing flash, so we've had these record highs being hit, but it's been led really by the US and still this large amount of money that's sitting around looking for a home.
Okay, so Donald Trump in his own right, has he been good for Australia's stock market? Is he technically good for investments and businesses here in Australia?
Not particularly, no. I think it's more, within the US, they're looking forward to more deregulation of things like the banking system, etc. Obviously manufacturing making a comeback as he tries to protect US manufacturing with tariffs. But for Australia itself, no, it's not particularly positive.
Okay, so there are a lot of businesses that we speak to, chief executives, who right now are making decisions about where they're going to allocate future capital. They're looking straight at America. They think there's a bigger return. We spoke earlier to the boss of Australian Super. He admits they're going to put more money in America into the future. Is this the reality of Australia trying to compete right now? If we don't compete, if we're not more competitive, then ultimately capital leaves Australia and heads to places like the United States.
Well, let's face it, Ross, we haven't got many industries in Australia to start off with, right? So our major industry is resources and mining, and most of those go to China, right? So Australia has benefited greatly from the expansion in China. We really don't have much in terms of manufacturing left. But in terms of, for example, as a small example, Santos has got a huge resource called Dorado, and obviously they had huge issues with the One Nations people and whatever trying to develop Barossa. Well, they have this huge resource in Australia with gas, and we're short gas in Australia, by the way, but they won't touch it at the moment because, they've got exposure in the US and they have a president there and a government that's encouraging investment, particularly in oil and gas. Whereas in Australia, as we know, there are huge difficulties in terms of getting which is ridiculous, in terms of getting a permit for what is our largest export industry.
Okay, I want to take you up on that very note, because right now, investment markets must be at least worried about the forthcoming election, because you don't know, say, if there's a landslide towards the coalition, you could get Peter Dutton in and the country swings to the right. But if you get the other side and Labor loses but needs the Greens to come together to form government, you've got a Labor-Greens alliance. The nation swings to the left very hard, so you're not quite certain as to which way the country's going to go.
That's an extra uncertainty, and obviously the Labor-Green type scenario is not one that will be particularly favourable to the stock market. I mean, we have enough issues in this country, and we talk to a lot of companies who are doing it pretty tough. They're doing it tough because obviously our electricity prices are ridiculously high. For a country that exports, one of the largest exporters of coal, gas, and uranium. We can't use most of that stuff here, because we want to go to wind and whatever, solar, which is madness. So obviously our manufacturing's hit, Retailers, even Coles and Woolies, their fridges, everything, prices are going up, right, because they have to pay for these high electricity, a swing towards the Labor Green will not be viewed as favourable. As I said, we already have an environment. We've seen Woodside make comments about, getting extra permits to extend their leases. Santos, as I've said, are not touching Australia. Amazing, isn't it? One of Australia's largest oil and gas companies will not touch us, will not spend a dollar in Australia.
I want to take you back one step and take you to the sector that really drove our stock market to its record highs, was the banking and finance sector, but banks in particular. The Commonwealth Bank, but then every other bank went with them. But it seemed as though the bubble was burst when Bendigo and Adelaide Bank came out. Tougher margins, clearly it had chased a bit of market share. That had come at a big cost, and that seemed to bring the whole banking sector down. Was the banking sector really priced too much for perfection?
I think it still is, Ross. And when you look at CBA on a P of 25, 26%, P of 26 growing at 1% per annum, it's ridiculous. Most people who look at these things and try and value things appropriately cannot make any sense of it. And if you look at most active managers in Australia, they're probably very underweight or they don't own any CBA. But again, one of the things in Australia is, we have this big rise in index funds. And as we know, CBA is now 10% of the index. And we have all this super going in every month into super, this 10 or 11% from every... And that means every dollar that those super funds invest in the market, 10% tends to go into CBA if they're indexed.
So in other words, that just pushes the price up?
For a certain amount of time, yes. But there will be a time, and you say it's happened. I don't think it's happened yet. You know, you'd like to see CBA on a P of, I don't know, 15, maybe 16 or something, but 26 times is look, it's an abnormality, it's an anomaly, and at some stage it'll normalise. Because you can't have a stock growing at 1-2% on a P of 26. It just doesn't make sense.
Okay, so that's the banks. But where do you see the value that's sitting out there at the moment? Is there anything that's popped out?
Yeah,
we did mention a few companies there that have gone okay.
Look, you know, by my nature, I'm a bit of a contrarian. You know, a value manager. We're contrarian, so we like to look for things which people don't. You know, and as I said, that we are in a market where momentum is favoured, earnings. You know, upgrades, earnings. Everyone chases a lot of quant funds as well, chasing the same stock. So we like to look for things which are out of favour. That's where we find value. So things. And these are sort of like stocks no one likes, you know, but that's why they're value. So a stock like Horizon, you know, which, for example, has invested $1 billion buying the Dow into Adelaide train line. Yeah. It's not yet making a return on that because they're trying to get, you know, things landed in Darwin to be transported all around Australia. So there's a $1 billion asset in Horizon's company is not being valued by the market, right? So we're looking at things which are out of favour, which hopefully at some point, you know, they'll start to see the earnings from these undervalued assets. And because of this momentum type driven market, you'll suddenly get this sort of quick re-rating at some stage.
I know very quickly, and I haven't got much time, but you've been an investor in casinos in the past. There's only one listed on the ASX at the moment. It's in trouble. That's the Star. What's your own sense?
Oh, look, I wouldn't go near the Star. I mean, obviously the debts, you know, the debt issues that they have, obviously the regulations and the government, you know, it's very difficult. So what's happened to the casinos, including Crown, which has been taken over, thank heavens, is, you know, obviously the costs have gone up because the compliance and regulations are a lot more complex. And obviously the, you know your customer rules have got a lot tougher, so their revenues are down. So they're sort of getting this squeeze from both ends where costs of doing business have gone up significantly and revenues are down. And hence, you know, and someone like Star, who spent, you know, hundreds of millions of dollars expanding in Queensland, you know, in Brisbane, on the Gold Coast, and they've spent a fortune in Sydney. Suddenly they're faced with a situation where the revenues, they've got the debt, but the revenues have fallen and the costs have gone through the roof because of the extra compliance costs.
I'll tell you what, Anton
so it's not a pretty picture.
Not a pretty picture. Anton Tagliaferro, always great to chat to you, and many thanks for your time today.
Thanks, Ross. Thanks very much.